All right, traders, investors, welcome in. In this video, I'm going to be testing an idea I have. I'm asking the question, is it better to add more positions in a pyramid or just advance the stop and start with a much bigger risk? We're going to find out today. This isn't something that I've been able to test until now, but we got an update on the back tester that will allow us to do it. So I know these videos don't get a lot of clicks. People prefer the videos of just me in the car driving and talking. So if Signal Boost, if you want to see more videos like this, where I'm breaking down my trading system and not just my trading system, but deep thoughts on how to actually go about testing, back testing, theses, develop ideas, and some actual data for you of how you should possibly trade, then make sure to comment and hit the thumbs up because it makes a difference. So first of all, the system that we're trading. Here's a back test where this is green is us, blue is buy and hold. This is Bitcoin's entire history on Coinbase. Here we see that this system generated 116,000% return on a 39% drawdown. In the same time period, Bitcoin had a less return, buy and hold, and also Bitcoin had significantly higher drawdown. Now we look at gold, which goes back over 100 years. Note that I changed nothing. I didn't change anything. And we see, okay, gold with a 62% drawdown, 43,000% return, a superior performance to buy and hold. And you might say, Trav, 62% drawdown is too much. Well, gold had over 80% drawdowns in the 100 years. So I'm not telling you to trade with 62% drawdown, but we're comparing drawdown adjusted returns. So I may even want to set this drawdown, increase the risk, set this drawdown to 80% so we could really compare. Now we look at NASDAQ. I haven't changed anything. Here we don't see as much overperformance. We have about equal with these settings. However, NASDAQ had like an 80% drawdown on the 2000.com. And here we're seeing a 63% drawdown. So still outperformance. And the main thing is we're not overfitting. It's not optimized. It's robust. We're looking back 60 years. And we're getting a 13,000% return. Okay, so what I wanted to test was I'll just show you a little bit about how this system works. So this is the standard where it's buying dips and it's also buying breakouts. And a signal has this little green here, and we can also turn it on, which I'll do for you guys to make it a little bit more obvious, where we'll put the trades on the chart so you can see. So it's buying right here, it's also buying right here, it's also buying here, here, and here. It's buying here, it's buying here, it's buying here, and then all the positions get stopped out over here, which isn't as ideal as it could have been, but you see that this is the stop. The average of dip buy entry was down here, and the average breakout entry was in here. And we had 1, 2, 3, 4, 5, 6, 7, or 6 positions stopped out in profit, and 1 position stopped out as a loss. Pretty good. And we can talk about, oh, how could we have taken profit up here? Well, that probably would have meant taking profit in here too. It's just not what our system does. I'm just explaining how the system works. Each time that it takes a new position, it advances all the stops. Now, something that I want to explore is what if it only takes a couple positions but advances all the stops like normal? So this is something we haven't been able to test, but we could test now. So for instance, with gold, it bought here, 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 it bought here. All these positions were stopped out. Yes, that's a monumental run. What if it only took the first 2 positions but traded them with much bigger size? Would that be helpful in a scenario like this, where there's 1, 2, 3, 4, and they all close out a loss? Or here, where 1, 2, these last 2 positions aren't very profitable, and the first 2 are. So if we go into the indicator, we have the new checkbox here, which is minimum stop loss distance. I don't know why it's called that, but what it is, it adapts the take profit stop loss on every pyramiding entry signal based on average entry price of all entries for this trigger. even if there's no actual entry due to pyramiding limit. So here, the first thing I'm going to do is I'm going to set my pyramid, or order size is at 50. I'm going to set it to 100, and I'm going to set pyramid to 0. So what that's going to do is it can't take any additional positions once it's in a position. So let's see what happens. Okay, now we see there's one position and it stopped out here. One position and stopped out here. So what is this going to do? I want to see. Well, here it says our win percentage is only 34%. However, we are seeing a 4,000% return for a 50% drawdown. Okay, so I don't know that it's going to be better. I'm just kind of testing and I want to see. That seems not as good when we had a 60% drawdown. So first, let's increase our pyramiding. I want to see if it hits a point where it stops being good. Here we're again at 49% with a 4,000%. Okay, I'm going to keep adding pyramiding here. So 2 positions. Interestingly, actually, the later positions were more profitable than the initial positions. Here we're seeing a 75% drawdown for 21,000% return. It's not very promising. So one of the things with testing is you will find out something doesn't work, and that's a win too. So remember when we had infinite pyramiding, we were seeing a 43,000% return for a 60% drawdown. So that's the score to beat. Okay. So I'm gonna put so we have 4,000. This isn't that promising, right? So this would tell us that each position is good. So here we're at 13,000. Again, let's put it at 100. It's interesting how going from 10 to 100, like those later one, the drawdown doesn't increase at all, but the profit increases considerably. Interesting. So far for gold, it looks like taking that extra position isn't what you want to do. I'm curious for Bitcoin. We're going to look at Bitcoin. So this is the back test we had on Bitcoin, right? 116,000% return for a 40% drawdown. I'm curious if we never pyramid and just take this initial position, what is going to happen? So here, that's actually very interesting. Actually really interesting. It's actually worse performance, but it still beating buy and hold, which says we're really onto something. As we're seeing 29,000% return, we're beating buy and hold for a 52% drawdown, actually. And again, Bitcoin had significantly more than a 52% drawdown in his period. So that's actually really interesting. And if we look at the chart and what that does now is these positions, I want to just check the trade log to make sure this works how it should have. There should have been a lot of trades stopped out on March 2, 2024. So we'll go to the strategy tester, a list of trades. People say, oh, TradingView you can't use for backtesting, it's not accurate. Well, if you go into the trade log and you confirm it works how you think it should, then it should be fine. So exit long. There should be a number of exits on, no, sorry, it's just one exit, right? There should be one exit on, it should be about on March 5, and it should be around 60 some thousand dollars. So it's like March 5, exit, exit, exit. Not seeing it. Exit, exit. January, February, March. Oh yeah, it's this one. 3 at 65,000. Okay. So this one. So it's working as expected. Now we could do some other things would be interesting. So one could be, so I want to play around with this. It's a little bit more promising for Bitcoin. I mean, it looks definitely better to do it the other way, but we're possibly learning something here. So one thing I'm going to do is I'm going to test just breakouts. 6,000% return for a 37% drawdown. That's pretty good. So here's what trading just breakdowns looks like. And actually, this wouldn't be counted. So it doesn't count open equity. So this trade, interesting. Okay. So I would like this to TP here and not extend it. It's kind of a minor thing, but yeah, okay. So you can see there's how well it works. Some, yeah, we would like it to maybe do a better job of TPing, but okay, so we're just kind of looking. I'm interested to see how the breakdown compares, or sorry, the dip buy compares to the breakout. It's much worse. So it's really interesting that you think buying a dip is good, but even on something like Bitcoin that goes up, generally it's better to buy the breakout. And you see it actually worked pretty great. It still works pretty great, but by not buying breakouts and buying dips, you actually missed out on this whole cycle. You needed to buy breakouts to participate in this cycle. And it also caused you to potentially have losing trades under the moving average. But that's very interesting. Okay. Now let's go back. So one of the things that I was interested in seeing, we're going to turn them both on now, is maybe just taking the first couple positions would maybe be better. So I'm going to put pyramiding on 1 and see what we see here. Now we have 30,000% return for a 52% drawdown. But what's interesting is with a greater pyramid, oh no, actually, hang on. Here, so for a 50% return, or 50% drawdown, yeah, so it's better to take every position, is what we're saying so far. But what if we put this on 3 maybe? Okay, well the drawdown's too much here, but it's promising. So I'm going to put it on 3. I'm going to reduce the position sizing and put it at 75. Remember, we need to compare drawdowns to see, so I want to see if this is at 50, or if we can get this down to about 50% compare. No, it's looking like it's worse though. I mean, what's interesting is how is it possible that increasing the pyramiding reduces the max drawdown? That doesn't even make sense to me. Because isn't there a time when adding another position, how is that possible that increasing the number of positions that are able to be opened, it reduces the drawdown? Maybe someone else can answer that. That's something I need to wrap my head around. Okay. Okay, let's go back. So what I'm learning is that it seems like it's correct to always just take every signal. Now, what's interesting though, so there's a couple triggers for the breakout. One is, does it close above the old level? One is, does it just touch it? It's generally better to trade close, but you notice we actually have a performance when we have no new pyramids and we change to touch. Or does it actually the same? We're at 52%, 29,000. We change it 33%. Why is that? I believe it's because you want to advance your stop more often. Uh, you want to advance your stop on failed breakouts too. So this would change things where It causes more trades to happen here. Okay, also I'm gonna go in here and look. Let's leave that. So the filter on the breakout is 180 days. What happens if this is more? Like a year. Seems to hurt actually, because now we have a 65% drawdown to the same for a same return. Am I wrong? It's at 22,000. Yeah, it's actually worse. So what we learned here is that when we're pyramiding, I guess the last one is NASDAQ. Let's look at NASDAQ. So here's NASDAQ. Oh, interesting. No pyramids. It's at 10,000% return. It looks like it's about the same. Okay. See how if you allow for more risk, it just goes way crazier, but you need to live through those drawdowns. So here, what was it? 63, 13,063. Okay. Uh, it's kind of a wash either way. It just seems like more pyramid is better. So this is where I invite you to critique me. People will say like, "Oh, you lost money last year, therefore I shouldn't listen to you." Well, I didn't trade this system, and I'm choosing whether and how I want to trade this system. Tell me, for instance, if you watch this and you think I'm full of shit on something, tell me why. Not because of my character or personality or past, but something in my backtesting is wrong. I even showed you the trade log. The trade log looks like the chart does. Is there something wrong with my methodology here? I'm looking at crypto, precious metals, and um, stock market indices, the leaders in those, and I'm using that. And I tested all of them, and it looked like more pyramid positions is just about always better. So that solves that. I had a question, I was curious, and it answered it. So yeah, appreciate y'all. Much love. Talk to y'all soon. And if you want to check out the system in more detail, there's a link to it down below. You get a free demo, okay? Much love. Peace.